What's up, y'all? It's Candy Girl here with my 2 cents on the latest and greatest slash the worst of the Trump tax reform. The most important players in this press briefing was the Secretary of Treasury, which is Steven Mnuchin, also known as the dorky one off of the Ghostbusters. Did anybody catch that? This is my first time really seeing this guy in living color, and I'm like, you remind me of somebody. And then I was like, you're that dorky one that was off of Ghostbusters. I'm going to go ahead and put a picture of him right here. The director of the National Economics Council, Gary Cohn, was also in attendance. The main objective is to cut taxes and to simplify the tax code. We will have 3 income tax brackets instead of the 7 that we have now. The middle income are supposed to get a tax cut. There will also be a 0% income tax on the first $24,000 for married couples only. Also, they will eliminate this death tax that I have never heard of in my life. They will also eliminate all tax deductions except for child care expenses and charitable donations. And lastly, they will reform capital investment taxes to return the top capital gains and dividend tax to 20% and repeal the Obamacare 3.8% tax rate on capital gains and dividends. I'm going to break all of this down for you, so don't worry, okay? Next, business tax. The big picture here is to make us more competitive as a country for people to build and maintain their businesses here. So, in particular, they're going to reduce the business tax from 35% to 15%, and this will include small businesses. Also, they're going to have a one-time tax on overseas investments and reduce taxes on repatriation of offshore investments. Lastly, they're going to have a 0% tax on profits that are unrelated to the United States. So any profits that are made overseas is not taxed, okay? Now, overall, the non-negotiable core principles are these. They're going to create jobs, simplify the tax code, and give a tax cut to the low income. Let's talk about this tax cut. Yes, Lord, I'm going for the tax cut. Now, let me tell you why. I'm a Democrat. However, every time I get my paycheck and I actually look on the pay stub and I look at what I started with, and then I look at all the taxes and all the benefits that I'm never really going to use, and then I look at the bottom line and I'm like, y'all make me want to be Republican real bad. Now, simplify the tax code. I would say yes and no. The reason why I say yes, God, is because for some reason, no matter how hard I try, every year I screw up my income taxes, okay? And then don't let me have investments that I have actually cashed out on that year. Let me just put what I earned. Let me put them little numbers in the boxes, and I want to shoot out a straight answer, and I want a refund. I don't want to owe anything. So to simplify it and to make sure that it's just like the 1040 EZ where it's just one page. It takes me about 10 minutes, and I turn around and I have $1,000 in my bank account. Ideal, right? However, I don't trust Trump with that much control over the tax code. When you really break all of this stuff down, you realize that this is not helping the middle income nor the low income. Let's go back to the deductions that are no longer going to exist under this new tax reform. There are tons and tons and tons of tax deductions that really help people like you and me take our adjusted gross income and bring it down so that we're not taxed as heavily. Also, for me, my student loans, I do an income-based repayment, so it's based off of my adjusted gross income. And if I can't use deductions to bring my AGI down, then my student loan payments are going to be higher. And for a person that does not make that much money, I need my payments to be 0. These are the deductions that you can just say goodbye to. First of all, sales tax deductions. Yes, you can actually write off sales tax on your federal taxes. health insurance premiums that you pay. That good Obamacare that is actually subsidizing your health insurance premiums, the health insurance premiums that you end up paying, you can write those off. The lifelong learning credit. So all of those people who are in college, who plan to go to college, who were in college, we are not going to be able to write off those expenses on our income taxes. And that's several $100s, thousands of dollars that we could be writing off that we will not be able to anymore. The expenses that you pay when you're looking for work, you could write off those expenses, including all of your food, the transportation, everything. But now you can't, at least under this tax reform, if it passes. Also, if you relocate for your job, if you finally get the job and it requires you to move more than 50 miles away, you could write that off on your taxes right now. But under this new under this new tax reform, not so. Also, the earned income tax credit, those things will inevitably be gone because he's getting rid of every deduction except for childcare expenses and charitable donations. Also, let's talk about this death tax. What they're really referring to is an estate tax. And let me just, explain this little nuance. Death tax sounds like something that everybody will have to pay. So they want you to agree to eliminating this death tax because it could happen to you. Everybody's got to die. And you don't want to be taxed after you die, do you? No, honey. That is actually the estate tax. And not everybody has an estate. And when we say estate, that means that all of your possessions, your property, your assets, everything would amount to $5.45 million before the estate tax even kicks in. And even at that, it's at 40%, which is only 1% higher than the top income tax bracket amount. So essentially, this is benefiting only those people who have $5.45 million in assets. Mind you that Donald Trump is the wealthiest president that we've had in U.S. history. He's worth $10 million. So guess who that's going to benefit? His kids. So I wonder why he wanted to put that in so bad as a non-negotiable item. Sounds like a conflict of interest if you ask me. Okay, let's talk about these capital gains and dividends. So for those who are not familiar, capital gains and dividends is basically referring to the money that you invest into businesses. So you take your capital and it gains value by you investing it into a company. Well, once you sell the stocks that you have in a company, that becomes a capital gain, which is then taxed. Okay, so mind you that they said that they were going to return the capital gain and dividend tax, not reduce. That was a red flag for me right away because wording is everything. Presentation is everything. It's not what you say, it's how you say it. So they're expecting us to just take it at face value that we're eliminating a death tax when it's really an estate tax. And they're also wanting us to take it for their word that returning something to a certain rate means that it's going to be reduced. Lies. Okay, let's break this down. Okay, so I went on charlesschwab.com. Okay, I didn't know this off the top of my head, but I did some research. Now, for long-term capital gain, so that would mean any stocks or investments that you hold for a year before you actually withdraw it, it gets a 15% tax. And according to them, they're returning it to 20%. Actually, they're increasing it from 15 to 20%. If you had a capital investment that was maintained for lower than a year, so you invested it and you took it right on out, there is no capital gain tax on it. What it really is it's treated like it's a regular income, okay? So you would be charged the regular income tax rate. Now, let's break that down. Okay? Because let's say for a person like me, I don't even make this much money, but let's say that together with my employment wages and my capital gains, I have a total income that year of $50,000. Okay, that would mean that my tax amount on the capital gains would actually be $6,837. Okay, now let's talk about under the new rule. I would be taxed $7,500. So you've got $6,800 versus $7,500. I'm gonna let you do the math on which one I actually want. Now let me break down this business tax situation. They are saying that they're going to go on a territorial system for business tax, and we're only going to tax money that businesses made that are related to the United States. But then in the same breath, they're saying that there's going to be a one-time tax on overseas profits. So if there's a tax on overseas profits, wouldn't that not be related to the United States? So once on one end you're saying the territorial system will only tax money that's related to the United States, but then on the other end you're going to say, but we'll only tax you once for profits made overseas. That makes absolutely no sense to me. So there's going to be some kind of loophole where they're getting all this extra money and we didn't even see it coming, or there's going to be tax breaks that people are going to try to finagle. This is a loophole loud and clear. You know what I'm saying? The way that you categorize those earnings, it makes a difference of whether you're going to pay taxes on it or not. Their tax reform was supposed to close loopholes. I just found a clear loophole right here. And I found another one. Let me break this down for you. If this becomes available to pass through businesses, that is going to be the death of our economy as the United States of America. And let me explain to you what pass-through companies means and why that is so significant if we include them in this reduced tax rate. Pass-through businesses are businesses that have shareholders and partners, okay? And the company takes the profits and they pass it through to their shareholders and partners, who then claim that income on their individual income tax, okay? So the problem with that is when you take that money and you pass it through to the shareholders are going to be taxed at a rate about 33-34% at the individual income tax rate, as opposed to if they finagle it somehow and make it so that it's a business income or business expenses or something related to business and not individual income, then they get the lower 15%. Instead of the government being able to tax that income at 33-34%, it's going to be taxed at only 15%. What does that mean? Tons of lost revenue for the country. And again, when they're cutting public services, talking about they don't have money for it, yet you're giving businesses a huge break, that doesn't seem fair to me, especially because we can't ensure that these big tax breaks are going to lead to more jobs so that people don't need public benefits. The Republicans have the majority of Senate. However, because of the fact that this plan is so inherently flawed, that it is going to increase the deficit after 10 years, it cannot pass by a simple majority. So now they have to go through reconciliation, which means that Democrats are going to have to sign on to it and give it about 60 votes overall, something like that. And the Democrats bet not go for this. If Donald Trump is so concerned about our economy, if he is so concerned about helping the poor, if he's so concerned about reducing the deficit, how about you stop taking so many golfing trips to Mar-a-Lago? Do you know one trip to Mar-a-Lago cost $3.6 million? And the reason why it costs so much money is because you've got to take military aircraft. Then you have to have a different cargo aircraft that's going to carry all of the limousines. Then you've got security. Then you've got his entourage. Then you got his guests. Not to mention the fact that Melania can't even stand your ass. So she doesn't even live in the White House with you. And that White House is as big as Memphis, Tennessee. And for some reason, she don't even want to be in the West Wing while you in the East Wing or whatever. She don't even have to see you. Yet she still don't want to live in the same premises as you. So she's over here in New York with y'all's son. And it's costing the taxpayers $410,000 a day. And let Donald Trump want to go ahead and get him some puss that day, and he comes and visits New York. It's going to cost us $500,000 a day just to have him over there. What if it passed? This is what I would recommend to each and every one of y'all. Y'all better get in them loopholes. Get in those loopholes. You need to start your own businesses, okay? I would much rather find a loophole in the income that I make so that I get taxed at 15% instead of 33%. If y'all gonna do it, I'm doing it too, okay? I've managed contracts between contractors and clients, and what I have noticed after looking at the contracts, I look at how much the company is charging their client for one deliverable. And let's say I wrote that deliverable. Okay, I made that deliverable. You're paying me $35 an hour, and it took me 2 hours to write it. So that's $70, right? That I get paid. Do you know they'll charge the client like $2,500 and I get $70? Y'all got me messed up. So it's about time that we stop getting cheated by the system and start our own businesses. And then when you get those businesses, give back to the communities that help lift you up. Give back to the communities that provided you that clientele. Number 2, get in them loopholes, y'all. You need to start owning stocks and investments, okay, in small business, okay? They're still investments. They're going to be taxed lower, hopefully. So I would much rather see somebody invest in a small business than a big business. Your dollars mean so much more to a small business than it does Apple or Microsoft or, HP, Google. That CEO is going to eat tonight with or without your ass. They still going to go to Hawaii 3 times a year with or without your purchase. But your investment and your purchases that support small businesses are paying for a child's roof over their head because they depend on your patronage 10 times more, 100 times more than a big business would. So invest in small businesses and let that be written off as something that you as a shareholder are claiming as a business income. How about that? Do that. So those are my 2 cents, y'all. Now, what I want y'all to comment on is not only your thoughts on the tax reform, but also, correct me if I'm wrong. I know that I had to do a lot of research to even formulate my opinions, and I could have been misinformed. If you know more about the territorial system for business taxes, I would really appreciate understanding that and the difference between the territorial system and this one-time tax on overseas profits. How is it that you can have both at the same time? It sounds like it's mutually exclusive. Those are my 2 cents. Y'all let me know what y'all think. Until next time, love and blessings.